right. Tracie, how are you?
Good, Chris. How are you?
Awesome. I'm fabulous, thank you. So I want to get to our homebuyer seminar, but for those of us, or for those of you who have never tuned in before or haven't seen the playback, my name is Chris Spade with Keller Williams Realty, and of course I had something just fly in my eye. And we bring you these seminars weekly to help you give you a little bit more information on buying a home. I have to apologize in advance. My puppy's back here. He's still young. So if he starts barking, that's what that is. But Tracie, why don't you
Hi.
introduce yourself?
Sure. So I'm Tracie Schmidt. I'm a mortgage loan advisor. I live in San Diego, but I'm licensed throughout California and multiple other states. Our goal is to help families build wealth through real estate. So Chris is one of the real estate partners that I work with, and he does these seminars, which are amazing to provide a ton of information to people. Engage if you want. If you're watching this on Facebook Live and you have a question, we would love to answer that for you. And as we're going through the presentation, but we've both been in the business for a minute, right, Chris?
Yes, we've been
Been
in the
there, done
business.
that.
Yeah, for a hot second. 16 years. I was having that conversation with someone today. 16 years I've been doing this. Isn't that crazy?
You need to change yourself with your dog on the cover of this
You know what?
presentation.
I'm going to do that. In
Okay.
fact, I have to talk to you. I was talking to a new marketing company today I'm going to start working with.
Okay.
So I was going to talk to you about that. But yes, I'm going to get Otis involved. I bought him some ties. So we've got some ties
Cute. Love
we're
it.
going to give him. So let's
Right.
get started. So that way we can respect everybody's time. This is who I am. Like I said, my name's Chris Spade, and this is your first home or your next home in your proven path to home ownership. I'm a member of the San Diego Association of Realtors, also a certified distressed property expert. I work with the Keller Williams Rainbow Network, and I'm also a member of the LGBTQ Housing Initiative, which Tracie helped me host a event for
That
this
was a
year.
ton of fun.
Yeah, it was
I
fun.
liked
We had a good time. We had a very good time. So what we want to do, I've just been selling homes, like I said, for 16 years. I was a TV news producer before that. Didn't find it terribly rewarding. So I got into real estate when at the worst possible time, as the market was crashing in 2007. It was crashing around everybody. And so I helped people navigate that market and all the way, up to 2020, which was an unprecedented market. Now we're in a new market, right? It shifted. So we want to talk to you about that. And so we're going to do that. So we're going to talk about the home buying process, but if there's anything along the way you want to learn, just shoot it into the chat and we'll go over those questions, no problem. So this is what we're going to cover today. We're going to cover the fears and facts about buying a home, the realities of the market today, and Tracie's going to help me with that. 6 simple steps to home ownership, the financing process, which Tracie is the expert. I'm not. So, this is where we have her, and then next steps. So the facts and fears about buying a home. I can't afford to buy a home right now. The fact is, until you do the math, you don't actually know what you can afford. And I'm sure you've seen this, Tracie, but there's been a lot of stuff where people say, the interest rate's too high, I can't afford it. But the truth of the matter is even when the interest rate was low, homes were selling for 150, 200, 250,000 more than what the homes were being listed for. And now homes are selling at market, below market. We're getting concessions. The interest rate is higher. So it's almost between the two payments, it's almost a wash, right?
Yeah. And I mean, there's products out there to kind of offset this too. I mean, even if current market, let's say is 7%, you do a 3-2-1 buy down the first year of your mortgage, you could be at 4%, which are the same payments that people were paying, when the market was low. So just,
Mhm.
Again, until you do the math, until you find out what's out there and available for you, it's always a good time to buy a house. People have been buying houses in our lifetimes, right? So
Yeah,
regardless
exactly.
of what the rate is, you're building equity, you're building wealth in a property.
Yes, exactly. So if I should wait until the market gets better. Like we were just talking about, there is no crystal ball. No one has a crystal ball, so we can't predict the future. So there is never a bad time to buy a home. Another fear is people don't have the money for the down payment. The fact is there are a variety of down payment options that are available. Do you want to talk about that for a second, Tracy?
Yeah, so there are down payment assistance loans. It depends on state that you're purchasing in. It depends on the loan program, whether you qualify for conventional or FHA assistance. There's a little box kind of that you have to fit in. But we always look at that option if someone doesn't have a down payment. We'll always kind of look to that. And then if for whatever reason it doesn't work, we'll coach you on, how much you need to save in order to buy, because there are costs even to down payment assistance programs that people aren't aware of. So it takes away
Okay.
some of that assistance and the rates are higher. So if you're kind of looking for the best rate, even though you get some assistance, it puts you kind of into a higher debt ratio. So we'll look at all that with you.
Exactly. One of the fears, I can't afford to buy my dream home. In fact, the best way to get into your dream home is just to buy your first home. And some of the things I'm seeing in this market, people are freaking out because they can't afford what they used to be able to afford. That's okay. Just get into that first property, build the equity, sell it, or make it a rental, right? And then just turn around, save more money and buy a new home, or pull the equity out of that home, make it a rental, and use the equity to buy it down. And then you're still building wealth on the first property you bought. So that's how you build wealth. See, there's so many things you can do.
There are.
Okay, next one. Fear, I can't afford to buy a home because my credit isn't very good. Truth is, there are always options, aren't there, Tracy?
Yeah, so conventional financing down to a 620, and government loans 580, sometimes even lower, just depending on the overall profile of the client. So again, you don't know until you know. Credit reports are good for 4 months. So even if we review your credit and you're not ready yet, we can run credit simulators and try to understand what you would need to do to impact your credit score and make it higher. And that doesn't cost you anything. So it's just a really good way to understand kind of where your starting point is.
Yeah. Another fear, I should wait until I'm certain about my domestic future. I think that's really funny because I would never consider not buying a home until I knew I was married or not, because, unless you, I guess, are on Match.com or Tinder all the time, you're just not gonna know.
What is that?
That is Otis. Otis, and see, Otis wants to play, which is now I'm pulling out the secret weapon, the bully
Okay.
stick. This is the
Oh,
bully stick,
yes.
and this
Those
will,
smell wonderful.
these are odorless.
Okay.
Otis, come here. You want a bully stick? Come here. There you go. Okay, he'll be chewing that. The next one, see, I knew that was going to happen because he was getting, this is his time to start playing. Fear of buying a home seems way too complicated. And the fact is, no one will ever tell you that buying a home is easy. It's just not. It's not easy to do. There's a lot of moving parts. There's a lot of people involved in the process. But you know what? It's no more complicated than actually buying a car at a dealership. It's just quicker buying the car, right? But
Yeah.
there's a lot of people involved in that process. Fear, I should pay off my student loan debt before buying a home. And in fact, Tracy, you don't have to do that, do you?
No, you don't have to do that. So again, it varies per program, but if there's no monthly payments, we could just use a small percentage of your balance. And so, I think on VA loans or government loans, the guidelines are different where I don't even know if we have to hit for a payment, but it changes constantly.
Mhm.
But yes, if you have student loans, it is not going to prevent you from purchasing a home. Just make sure they're not delinquent student loans because that
Okay.
could affect you if you're doing a government loan.
Yeah, exactly. Okay, so let's talk for a second about interest rates. So mortgage interest rates are still low. I mean, historically speaking, because they have been in the past at about 18%. But right now the Fed just had a rate adjustment. So it went down a little bit, right, Tracy? So we were at 7.25 about a week ago, right?
Yeah, it improved up until today. We lost that gain.
Okay.
And when rates improve, what really improves is the cost to get the rate. So 7.25 would exist last week or this week, but the cost to get 7.25 last week might have been one buy down point, where this week it's no buy down points, right? So that's how it varies. But we lost a little bit of gain today. I think they projected in December we should only see a 50 basis point increase from the Fed. but we're heading in the right direction. The way that the inflation numbers came out, it wasn't as drastic as it's been, which is good news.
Good. So
Yes.
here are some benefits. Your long-term investment grows. You get equity buildup. Your value appreciates, and you're paying down debt the longer you own the home. So why buy now? Pride of ownership. This is stability and security. You create a sense of community wherever you're at, whether you're in a condo complex or not. You can customize your home and do whatever you want. Nobody's going to tell you can't paint the wall or put a nail hole in the wall, or that you can't change the floor out. Tax benefits. Now, the thing is people, you have to talk to your tax provider, but when think about the tax benefits of this, you've got you get to write off your interest that you pay on the mortgage to lower your taxable income, and your accountant and CPA can explain that to you. But now that the rates are higher, that just means you're getting to write off more.
But when you rent, guess what? You're
You
paying
get zero.
100% interest to your landlord.
Yeah, exactly.
You're
And
paying their mortgage for them and giving them the tax write-off.
yeah, exactly, because they get to depreciate it in the other direction.
Yes.
And you're building wealth. So mortgage percentage, principal and interest. So historically, people were paying 21.6% of their income to their mortgage payment. Today, on average across the US, it's about 15.2%. What are you seeing in San Diego, Tracie? What is like the debt to income that you can have?
Well, so for loans, I mean, we use gross income for loans. So we could go up to like 49% if we get the approval on conventional financing. It used to be stuck at 45%. And then on government loans, it could go over 55% of your gross income. That's why it's really important that if a mortgage lender says, yeah, you're qualified for this payment, you have to really understand what is your net income, what are your expenses that we don't see on credit, what are you going to be comfortable with monthly. But I think too, what you're seeing is that, over time and each year, generally, you get a wage increase also. Right, on average. So what's happening is, your payment is fixed, it's staying the same, but each year you're getting an increase and a better tax benefit, which is going to be a lower percentage of your income.
Yes. All right, let's talk about owning versus renting. Now this is a national slide. So, let's say their homes were $250,000 in San Diego. You're and pay $1,200 a month towards your mortgage. Over that 30 years that you've had the mortgage, assuming you never sold the home, you would own that home, and it would be worth $435,000 approximately. Let's just say, these are whole numbers, and you own an asset that's grown in value, over that, or excuse me, over that 30 years, you would have paid $435,000, and you own an asset that has grown in value over that amount. Now, if you are renting on the flip side, and you're paying $1,200 a month towards your landlord's mortgage, and let's say you go over there, assuming that your rent never goes up, you've already paid your landlord over a total of 30 years, $432,000. What's better, owning the home or paying your landlord 100%? Now, there's some people that just aren't ready to buy right now, and that's okay. We're just laying this out for you so you have an idea to get your wheels spinning, right? Now, so there are some reasons to hold off buying, like we said, like if you're going to change jobs. For example, let's say you are hating life right now and hating your job, which a lot of people are. And, I think if I had to work for somebody in particular, I'd probably want to quit my job too. I watch TikTok videos and I see a lot of people miserable.
Yeah.
But so if you're going to change your jobs, hold off on buying. Financially, your credit score, down payment. If your credit score is way low, lower than what Tracie had discussed, or if you just don't have enough for the down payment, but always keep in mind that's a hurdle that can probably be worked on. Like Tracie said, we can work on getting some down payment assistance. If it's just going to be way too expensive for you and you're going to be house poor, that might be a reason to hold off buying. Or if it's going to be short-term ownership, let's say you're in the military and you're only going to be in San Diego another 6 months. You're not going to really get any equity and you really won't get any appreciation. And so if you turned around and sold that house, you'd be actually losing money. So those are some reasons to hold off on buying. But like I said, most of these can be overcome,
Yep.
with the exception of if you're not going to be here that long, that I get. So let's talk about the realities in the market. The median home price in San Diego, $780,000. Interest rates, 7.25%. The market itself is shifting. So it's, there's a lot of real estate agents are like, it's still a seller's market. Homes are selling overpriced, blah, 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 blah. And that is happening in some cases. But the reality is those sellers are giving back to the buyers in one way or another, whether it's in the form of closing costs, repair requests, rate buy downs. There's a lot of stuff happening, right, Tracie?
Yeah, absolutely. So I think we've seen that shift also. And, today, for example, my client got a purchase offer accepted, and there were some people like flippers, right, that put offers in that the seller didn't want to entertain, but they weren't competing like they were, right? Where generally there would be 10 or 15 offers on this house that you're competing for. People are over asking. The price they offered got accepted like that. So you're not seeing what was happening. So it is definitely shifting. There is still some competition out there depending on, the area and the price point, but it's looking good for buyers, I think.
Yeah, I agree.
Mhm.
Okay, so let's talk about the easy steps to homeownership. First of all, you got to hire an agent. Hopefully that's me. 2, you need to secure your pre-approval and financing. Hopefully that's Tracie. 3, you got to find your home. Okay. 4, we're going to make an offer and negotiate. Number 5, we're going to get the home inspected and negotiate repairs. Now, that is something that we didn't really do in the last couple of years. We would get the home inspection, but there would be no negotiation of repairs. And number 6, you're going to close and become a homeowner. Now, I want to put this out there. If you'd like to download my app, you can. It's app.kw.com with KWFKVBLA. That's my app. That's my personal app. On that app, it's going to guide you in real time about your transaction. It's going to give you a lot of options, hyperlocal insights. And then if you ever want to schedule an appointment, you can just click right from that app and it gets to me, and we can schedule a time to go take a peek at any homes you find. So
Awesome.
number 1, hire the agent. As your agent, it's my job to educate you about the market, analyze your wants and needs, steer you into the homes that fit your criteria. Okay. That's different from steering you into a neighborhood. We're going to be steering you into homes that fit your criteria. Coordinate the work of other professionals. I'm going to negotiate on your behalf, and I'm going to solve any problems that might come up.
And it's important for people to know that as a buyer, they don't pay you. Right.
Correct.
Do all of those things, but you're paid by the other party in the transaction or the seller.
That is correct. That is correct. So to work with me as a buyer is free. There is a buyer's representation agreement we go over. It sets mutual expectations in writing. It commits me to finding you the perfect home, and it confirms exclusivity between the two of us. And we'll talk about that more at your consultation. So when to hire an agent? I always tell people, if you're thinking about buying a home, like it's been on your brain, getting this process started in terms of doing your research, it's always a good time to start talking to an agent. The advice I give you is, you don't get charged for. I'm not going to harass you and say, did you get your pre-approval, this. I will tell you, we can't go look at houses until you've gotten that pre-approval. But once you've done that, then then we can go start looking at houses. Then we'll get you under contract, get you to the closing, and then that way you can move into your new home and then make your last lease payment. I was going to say mortgage payment. That's not right.
Nope.
You're going to start to make the mortgage payments.
Yes.
Step 2, and this is where Tracie is going to really step in, is secure your financing. So Tracie, talk to us about the difference between a pre-approval and a pre-qualification.
Yeah, so a pre-approval is definitely stronger for the buyer. And I'll kind of give an example. So sometimes buyers they want to get pre-qualified or pre-approved, and they just call a lender, and the lender asks them some questions over the phone, and they're like, okay, great, you sound like you're awesome. Glad that you make that much money and your credit's good. Let me give you a letter to go shop around with. So that's more of a pre-qualification where you're just giving some general information over the phone. You haven't provided any documents, they haven't reviewed your credit, or maybe just your credit, and then they issue a letter and you're like, here, Chris, look, I have a letter. And then he takes you out and you find your perfect home and you submit an offer, and then you go back to that lender and they're like, oh, wait, but we didn't look at your income. So you don't want that, right? What you do want is a pre-approval, and that's just a formal, secure application. We're going to review a recent credit report. We're going to look at your income, cash flow it. We're going to look at your assets, make sure you don't have large deposits. Are you moving money around? Do you need to pull from your 401k? Are you getting gift funds, right? There's so many things that are involved that we need to know upfront so we can structure your loan appropriately. And then it's actually when I give a letter to Chris, he's like, oh, this is golden. I know if Tracie gives me a letter that if I find the perfect house for my client, we can get in there, we could offer a 21-day closer sooner, and we're good to go, right? And you just have that security and that feeling of confidence that that loan's going to close.
I think some of the anxiety involving actually getting pre-approved for a loan is people think it's so complicated, but it's very, first of all, it's extremely easy to fill out the loan application, right?
Oh yeah, I mean, it's literally a link. You create an account and you put like your name, your address, your social, your date of birth, things that you don't want me to take over the phone or email to me, right? It's just it's on your computer. We could even send it to your mobile phone. It notifies me when you're done. And then you could actually even take pictures of your documents and it's securely uploaded into that account. You can scan them into that account. From the time I get everything, it takes me about 2 hours. And so you could literally get pre-approved tomorrow and be out shopping with Chris this weekend. That's how quick it is.
Yeah. And what type of documentation do they need?
So if you're a wage earner, meaning you get a W-2 and a pay stub, you'll just need, if you're paid every 2 weeks, you'll need 2 most recent pay stubs and the last 2 years of your W-2s. That's it for income. If you're self-employed or you're on fixed income, that's going to change a little bit. And then we just want to see, where your funds to close are coming from. So your asset statement, just 1 month, most recent, like checking, savings, 401k, any account that you're going to use. And that's all I ask for upfront from clients. And that's enough for me to kind of do my thing and get them numbers and go over payments and stuff.
Nice.
Yeah.
Okay, so choosing a lender. It's always good to ask for referrals. I bring Tracie on because I've worked with her in the past. We've closed multiple deals together. And she's solid. She's one of my go-tos. You interview the ones that you want to, but close with the one whom you feel most comfortable. You're gonna, like we said, prepare the loan application to get pre-approved and determine what you can pay and select a loan option. And they're always going to give you the best one. They're not going to give you the one that doesn't make sense to you. Sometimes,
Hopefully.
yes, sometimes you only get one choice, and there's reasons for that, but overall you get options. So now, this slide is with Keller Mortgage. We have to keep this in here. Keller Williams has its own mortgage company, but just like Tracie said, you can apply directly and digitally with her, and it expedites the process. So here's a couple of the things that I always tell people to do. Create a budget when you're starting to look for a home. Is there anything that you can cut? Okay, so obviously whatever your rent payment is, that's going to go towards your mortgage payment. And are you able to afford more? So identify your expenses. Determine the amount that you can comfortably spend on your new home and make simple changes to your budget that are going to help you. So I had a client that went out for lunch every single day. And every single day he was spending about $15 a day on lunch at work. So when you do that, that's $75 a week, right? That's a lot of money. So you're talking, you're a little less than $250 a month on lunches. Well, guess what? He had another $250 just by taking a bologna sandwich. I'm not, you don't have to take a bologna sandwich. You
Yes.
can take tuna, but
Oh.
you get my point, right?
And I just want to say too, like so I always ask two questions. The first question is, what is your monthly payment that you're comfortable with all in? That's
mhm,
taxes, insurance, HOA. So that's something to think about, right? If you're thinking about buying a home like Chris is talking about. So, you have to be able to tell me the maximum, Tracie, that I think I can afford is $3,500 a month. The
mhm,
second question is, how much total money do you have to invest in the home? Because
mhm,
just with those two pieces of information, I can work backwards and tell you what sales price you should be looking in. So that's really important to start that process. And a lot of times when people come to me to apply, I ask them that and they're like, they have no idea how much of a payment they want. And I'm like, okay, well, you have to tell me, right? Because what if I
mhm.
give you a payment of $7,000, or 4,000 and you can't afford that? So just
Yeah,
keep that in mind as you're thinking about buying.
yeah, yeah. Now, understanding mortgages, down payment, how much? So there's different types of mortgages. There's different types of conventional loans. There's 3%, 5%, 10%, 15%, 20%. FHA, which is 3.5%, VA, which is zero down, or USDA is zero down. So you have to determine how much of a down payment you have. Your interest payment, what is the rate that you're going to get on your loan, and your term for how long? Most people do a 30-year mortgage, but there are other mortgage programs out there as well. So monthly mortgage payment, that is calculated by PITI. Do you want to talk about that, Tracie?
Yeah, principal, interest, taxes, and insurance. And you could add possibly a PMI to the end and an HOA,
Joy.
depending if it's a condo or a PUD, or if there's a small HOA. But principal, so this is what we were talking about, building wealth, right? So instead of you taking your cash and putting it to rent, you're taking your cash and you're paying down the principal amount of that mortgage balance, meaning that amount's going to go down. And as it goes down, you're building equity where eventually that balance will be zero. And that equity in that home will be completely yours, whatever that value of the house is. So interest, that's what you're paying back for the loan. Interest is paid mostly at the most interest is paid at the beginning of the mortgage. So you're going to see a large portion of your payment go towards interest the first 2, 3, 4 years. You'll continue to pay interest, but it slowly will go less and less each month the longer the term is. Taxes in California, we use an average of about 1.2% of the sales price. But again, we would look at the specific property to understand what that amount would be. And then homeowners insurance, that varies, right? So we don't tell you what carrier to pick. Usually people will talk to whomever they have their car insurance through and get a quote. And then Chris and I, probably as professionals in this business, have people that we work with also, that we could always refer people to and make sure they're getting a good deal. But that's going to encumber your entire payment. If you put 10% down or more in California, you have the option to not pay your taxes and insurance in your payment. It's something you could pay on your own. If you did want a lower monthly payment, maybe you got some bonuses or commission certain times of the year that you want to just pay it on your own, you're welcome to do that as well.
Yeah, but I would just do it all in one lump sum. That way it's out of sight, out of mind.
Yes, that most people do that.
Yeah,
Absolutely.
yeah. Okay, so your down payment, that's based on your pre-approval amount. And like we were talking, it can depend on the loan. It can vary from 3 to 20% down. And these funds can come from any one of these three parent places. Talk, Tracie, about gifts, because I think that some people don't think that they can get gifts. So tell us about that.
Yeah, you actually on any loan program, you can get gift funds. And basically gift funds can be from a parent, it could be from mother-in-law, father-in-law, aunt, uncle, anybody that has a close-knit relationship. Even if you've had a best friend for 25 years and you could explain that relationship and how they want to help you with the home. If you get married and you get gifts from people, as long as we can kind of source those deposits if they're checks and things. So basically a gift is money where we're going to provide a letter. It's money that you're going to get to go towards the down payment or closing costs. And you could, on FHA, VA, you can get 100% of both in the form of a gift. So, and I would talk to a tax preparer, because people think that there's these tax laws when people get gifts, but we don't report it to anyone, right? We're not telling the IRS that you're getting a gift. And there's certain dollar amounts that you can go up to over the year. So usually you don't meet that amount. So I would just definitely talk to a CPA if you have any questions, but it's a great way to help your kid buy a house, or, you know, someone you're close with.
Yes. So you're going to maintain your pre-approval. And these are some don'ts. You're not going to make any big purchases, no cars, no big toys. You're not going to go buy furniture, even if it's 0 payments for 12 months. You're not going to do any of that. No new credit, right? Or debt added, no job changes. And you're not going to take your down payment and go and spend that, because if you're going to do any one of those things, Tracie's going to find out. And how are you going to find that out,
I'm going to
Tracie?
yell at you. No. So honestly, it happens, right? And so I have a client, they're in escrow right now, and they text me on a Saturday morning frantic because I'm like, don't do anything until you talk to me. And they're like, oh my God, our car battery died again. We can't start our car. We have to get a car. What are we going to do? Freaking out. And I'm like, okay, so you're going to go buy a car this weekend. How much is the payment? $300. So I added it to their debt ratio, made sure that it would work. And I was like, you can go and buy the car, right? As long as you're not going to take away from your funds, your debt to income ratio still works. So that's why we're saying, you know, until you talk to your trusted loan advisor, you know, you have to give them that information, because sometimes it's okay that you need to do these things. But 10 days before loan closing, we're going to look at a soft pull. It won't be an inquiry on your credit report, but we'll know if you charged up your balances, opened a new debt, had 10 inquiries on your credit report from the 2 months ago, maybe, that we started working together. So don't do it if you can avoid it.
Don't do it. Okay. So the third step, which is the fun part, and that is finding your home. So we're going to define what you're looking for, your needs versus your wants. So you need a roof, you want a pool. Those are your needs versus your wants. We're going to learn about the market and what's happening, because it's changing and it's in flux right now. So, you know, if you had a friend buy a house, you know, a year ago, it's definitely different than it is today. It's different than it was 3 weeks ago, a month ago. You know, it's constantly changing. And then we're going to refine your search. And you're going to see, as you start looking at houses, you're going to start funneling down exactly what you're looking for. And again, you can do all this on my app. This is the link. Take a screenshot of this, take a picture, download the app, and this is what you can do to start your home search. So who has been looking for houses, and what do you look for? So most of the time you are looking for your layout, space, location to work in, schools, features, and amenities. Versus what I'm looking out for. Now, I'm looking at how the home compares in terms of size, layout, and value to other homes in the area. And with regard to price, is this home overpriced? There's some weird noise going on back here, and I don't know what that is. I think I'm being listened to. Everybody wants to buy a house.
They're knocking down your
That's
door.
not on
They
Facebook.
can't
All of a
wait.
sudden, I know, all of a sudden I'm hearing this and I'm like, what is that noise? I'm also looking at potential resale value. What is that going to look like in the future? I'm also looking at big ticket items such as the roof, what I can see from the roof, how many layers of shingles does it have, the HVAC system, maintenance, and any structural concerns. Oh, Eric just texted me and says, I can totally hear you talking on the phone with the camera. Ha ha ha. That's what it is.
So he's here.
It's our puppy camera. That's what it is. That's the noise. I was like, it's coming from over there. And then Eric just texted me, I can totally hear you talking on the phone with
That
the
is
camera.
great. You gotta, it's like a baby cam.
Yeah, except it's me.
It's the Chris cam.
Yeah, he says, I can't see you, but I just heard you. That's what it is. Okay.
Okay, good. I'm glad
Now
we
I
figured
know,
it out.
now I know what it is. I forgot we have the puppy cam over there. And then I'm also looking at things like, is the foundation wonky, stuff like that. I'm also looking at, you know, crosswise cracks in the walls. These are all big things that I'm looking for. And I'm going to give you my best advice on, you know, what that's going to entail, because those are big ticket items. So let's talk about condos and townhomes. Now, a lot of people, this is their first jump into the housing pool. And the pros for that, it's typically lower cost per square foot. You don't have any yard work or maintenance on the home. Your HOA covers that. You're going to have amenities, mostly swimming pools or some sort of playground and, community rooms. The cons of doing that, it's shared ownership. So you could have people on top of you, underneath you, on the side of you. You own just the space inside the building. Like I said, there's homeowner fees and shared maintenance costs. There's also HOA assessment. So if the building funds are low, the reserve amounts are low, then you get to share in the assessment, which can be $10,000, $50,000. It doesn't matter. Whatever the HOA board decides it needs, you get to share in that cost. It's managed by a board of directors. That can be good or bad. I always tell people, if you're going to buy in a HOA, you might as well get on the board, because you're going to know all the inside juju that's going to go on there. And it's governed by rules around pets and vehicles and noise and all that kinds of stuff as well.
Yep.
New construction is an option right now in San Diego. There's new construction going on. The pros is it's brand new. You get typically 10-year warranties on it. You get to pick your lot, your features, and your design. Typically lock in on the price. You can get good-ish deals right now, because the new builds are giving away incentives, but it's not 100% guaranteed. The cons, the features you want get added to the price. The future of the neighborhood, not totally certain. The builder plans on something, but it might not always go that way. Typically, they're in more outlying areas. There's no nearby amenities yet. Those typically get built later, and there's no firm closing date. So you can't go into a new construction project and go, oh, well, we want to move in 30 days. And I'm like, you see those sticks over there? They're nowhere near being done. You're looking at 6 months down the road. And whatever they tell you, we're going to move people in 6 months. It's really 8 or 9 months. There's always delays because you can't count on the weather.
And don't go to a new build without Chris.
Yeah, don't ever do that.
Bring your agent.
Always, because those contracts, interestingly enough, the California purchase agreement is 16 pages, I believe. But the new build contracts can be 75, 200 pages. I mean, you really need to read the fine print in those. They have some things in there that you can't sell the condo for 2 years. There's all these things.
Yeah, and you're not paying Chris, so you need someone to have your back, because otherwise you're going to be working with the builder's agent.
Yep. And they have the builder's best interest in mind. So step 4, we're going to make an offer and we're going to start negotiating. So we're going to talk about price. So offer has to reflect the true market value of the home. And to protect you, we get an appraisal on your property that you get to pay for. But that is an independent person who comes in and says, I believe the home is worth X. So, if you're under contract for 800,000 and it appraises at 780, there's a $20,000 delta. There's ways that can be made up. The price can either be reduced. You can do 50-50. You come in with 10, the seller comes down 10, or you come in with the full 20, or you walk away. That's the other option. You can walk away. Terms. There's 6 basic categories addressing timing and financial considerations in the contract. Typically, in the California purchase agreement, everything is 17 days. It used to be 17 and 21. They just streamlined it, put it all back to 17. Those can be adjusted. Those are negotiable. But typically it's all 17 days. Your contingencies, they're often referred to as conditions, subjects, but your contingencies, that allows you to opt out of the deal if the home has a problem. Inspections come back, the seller won't make any credits for repairs, you can back out. If at the 11th hour, you can't get the loan for whatever reason, let's say you lose your job, before you've released your contingencies, you can back out of the contract and get your earnest money deposit back. So these are all different things that you can do. Step 5, inspections and repairs. So your option period, 7 to 17 days after any offer. California purchase agreement sets 17 days aside for you to do that. But we put 7 to 17 because it can be negotiated somewhere in there. If somebody wants you to do it in less than 7 days, just walk away. It's not worth it. The property inspection exposes any structural or hidden issues in the home. So that is what you need that for. And by the way, if the inspector specifically says, I think you need X, meaning sewer scope inspection, you need a roof inspection, a foundation inspection. I don't care what they say, shell out the money and get that. It's going to be another $200 on top of your inspections, but it's so important because if you don't do that and you close escrow, something will happen. Something will happen, I guarantee you. We will get a home warranty, but the home warranty is only going to cover $1,000 of the $17,000 bill it's going to cost to replace the sewer pipe. I guarantee you, because it's happened to a client before. So just listen to me. You'll be thanking me. So we're not going to sweat the small stuff. We're not going to sweat the cosmetic stuff, but we're going to look at the big stuff during the inspection, the cracks and crumbling in the foundation, the cracks inside the house over the windows. We were talking about those vertical or those horizontal cracks in the walls, water stains in ceiling, floors, or walls, faded or worn shingles, plumbing or electrical problems, mold, or termite. You know, we live in California where if you don't have termites, you will have termites. They're listening to me again on the phone. All the nurses up in San Bernardino, they're getting real estate advice. They just can't see me.
You should just yell out like something embarrassing about Eric so he stops listening.
They're all in the ER watching it on the phone. Step 6, we're going to close your house and become a homeowner. Now, you're going to keep yourself mortgage worthy during this whole process. I want you to be able to budget for additional expenses. So your closing costs anywhere from 2 to 3% in the loan amount. That includes your lender and title and appraisal and escrow fees. Your earnest money deposit, that's going to be approximately 1% of the purchase price, but that is your money. That doesn't go to the seller. So as long as you're successfully completing the transaction, that can go towards your down payment. It can go towards your closing costs. It's all those things. If you cancel the transaction and you have not released your contingencies, you can get that earnest money deposit back in most cases. But if you cancel the transaction after you've released your contingencies, and you're going to know the day you release your contingencies, because I'm going to tell you, this is it. You're moving forward. Your deposit's in jeopardy at this point. Once you sign this document and I send it over. So anyway, you'll know that day.
I think that's why too, sorry, just to interrupt really quick, because it's so important to know the lender that you're working with and that they can meet those contingency dates, because I've had so many times where they're like at day 14 and something happens and there's a hiccup.
Yep.
And then we have to like hurry up and somehow get contingencies removed in 3 days because we get all of the right information. So just make sure you're having those conversations. And, you know, if you ask a lender, like, hey, can you close on time? They're always going to say yes. Right? Dig, you know, what's your processing look like? Your underwriting, what are your average turn times? What do their reviews say about closing on time or early? You really have to be careful of that because everybody's going to say yes. And it could be too late before you really find out. So I wouldn't want that to happen.
Yes, absolutely. Your inspection. So we don't have an option period money in California. That's not something we have. So you don't have to worry about that. Inspections, depending on the size of your home, they're going to run you $300 to $600. A small 1-bedroom condo might be $350. Houses $600-700 depending on the square footage. Survey and or your appraisal, that's between, what are those now, Tracy? About $400 or $500?
Yeah, I mean, a little bit higher because appraisers realized through COVID that they could charge more. So I usually average about $550. VA appraisers start minimally at $700. Yeah.
Oh.
Yeah. And it's not even any of our appraisers. They're through the VA portal. And so, yep, you'll see that invoice. It's fun.
Yeah, that's crazy. There might be some miscellaneous fees, so just keep an extra pad of a few $100. We're going to ask you to have at least 1 year of homeowners insurance. And then you're going to want to have reserves for improvements or repairs after the sale. And then what we're going to do is we're going to do our final walkthrough about 5 days prior to close of escrow. Okay. And that's just to make sure the seller's out and they haven't done anything. And then at the closing, you're going to bring your photo ID and you're going to bring some patience. Because it takes a hot minute to sign those loan documents. And your wrist will get tired. But you just have to be patient and you have to make sure you sign the documents exactly the way the notary tells you how to sign them. If you don't, they get sent back, they will be rejected and they will come back to you. So
Sounds like
just
that's
listen.
happened to you before.
Yes, that's happened before. Twice it's happened. You're also going to get an estimate settlement statement and wiring instructions with the exact dollar amount that you need to wire to the escrow company to close the transaction. Also, when you are wiring money, I want you to take those wiring instructions, pick up the phone, call your escrow officer, make sure the routing number and the account number is correct because wire fraud is on the rise. If you want to hear my wire fraud scam video and how they do it, if you're watching this on YouTube, it's just, or I'm sorry, in Facebook, it's just below this video, this live. You're going to also protect your investment. You're going to perform routine maintenance on your home systems, depending on their age and style. You're going to keep an eye on your home. You're going to keep a file of all your receipts. You really need to keep track of every little thing you do because when you go to sell the house, you have to disclose it to the new person. And we're going to get you a home warranty on your property, and we'll talk more about that, but it really covers a lot of things within your first year. I am gonna go to the chat. I'm not sure that we have any questions. Nope, I don't see any. Did you have anything else to add, Tracie?
No, I mean, we could do this presentation a million times and I never get tired of it because it's just so important for
Yes, I
people
agree.
to know this stuff,
Yeah.
it is so easy, but you have to have people that can, like Chris and I, that will walk you through it and hold your hand and educate you. And, I mean, even today, like I called the client, I'm like, hey, we're ready to close, close of escrow is November 30th. We're like, how many days, 15 days early or something there, but we can't close early, but we can make things happen. When you have a great team in your corner, and you need that to be competitive in this market also and be able
Yep.
to,
Even though it's changing and it's slowed down just a little bit, yeah, you have to have that. You have to have good people in your corner. So if anybody ever has any questions, you can feel free to send me a direct message. You can send Tracie a direct message. Tracie, how do people get in touch with you?
So I always just say, go to Google. You could find me anywhere, and it's Tracie, Tracie, and my last name is Schmidt. You could see it on the screen. Call or text 858-336-5200. I work all the time, so you'll get in touch with me. I answer my phone. I do. I work constantly. Chris knows. I tried to text you last night and I saw the notification silent thing. I'm like, I'm not gonna wake him up at talk about work at like 10, but
Oh, I was in bed. I wouldn't have heard you anyway. The puppy was snoring, so
I was building
it's right
workflows
there.
at midnight. I'm like, what is wrong with me? But we just love what we do. Chris is a great agent. I've worked with several clients. I've referred clients to him to sell their home, and
Oh, and they were the most wonderful humans on the
I
planet.
know. And Chris makes it fun. A lot of times you want to make it a fun process. You want to be out there looking for homes and, have someone that is it's in your corner. And I know Chris does that for your clients. So I appreciate you having me on again.
Thank you very much.
You. Eric, I'm so excited.
Yes,
Give
thank
you the
you. I
puppy.
know he's coming home tonight, and then we're gonna open Otis's. We got a new bark box for the puppy. So
What is
we're
that?
excited for the
What
puppy.
is a
The puppy
bark
has no
box?
idea what the bark box. What's a bark box?
Yes.
You get
There's a little
treat.
plug.
You get treats, toys, um, uh, and all kinds of crap that it's not like that dog needs any more toys or treats. I mean, like the floor is covered in dinosaurs and chewies and pulleys and these on a bully stick right now. So, I'm like one of those. Yeah.
Well, I can't wait to see him in the tie and you on that cover next week. Better see that.
Yeah, we're gonna be working on it because he's super cute. All right, love. Thank you
All
so
right.
much.
Good
Thanks
night.
everybody for watching. Have
Bye,
a great
guys.
night. Bye
Okay.
bye.
Bye, Chris.